So my husband and I are gamers, and we have a big group of friends that we video game with that live all over the country. So when we game together, we use the microphones to talk with each other.
You know what I think the most fun about this podcast is learning the things other team members are into. Like, you're super into gaming. Chris was on here. He has like every Lego piece you can imagine and like sells them. Like, who would have thought? He has a Lego room that's nicer than his house. Like, boggles my mind. I love it.
Team member trivia with Cooper.
I tend to surprise people with my gaming hobby. I don't think it's something that
I never would have
normally
guessed.
peg me with.
No.
Unless you walk into her office, then she has a picture of Zelda. Is it right? Zelda. I don't know what Zelda is. But
I'm seeing it now. I'm seeing it.
Can you sing the tune,
No.
James?
That's it.
Yes.
You guys are pulling a different side of James out because this doesn't normally happen.
Can that be the intro to the podcast? Because that was good.
Before you two got here, we were talking about their favorite episodes that they've listened to.
You can just admit that you haven't listened to them. That's all
Why
right.
would you just throw us under the bus like that?
It's what I do. It's what I do.
There's opportunity. There's room to...
So that we can be like, yeah, listen, because they're fun.
Well, it brings up an interesting point because I was talking to a friend of mine, and yes, Cooper, I do have friends. And she was saying that she hasn't listened to Money Donuts yet because she's like, I don't want to listen to a boring financial podcast. And I was like, it's not boring. James has facts for you all the time.
I want to do the TikTok that, do you want to hear my new favorite sound? I think it would make so much sense. But Melanie, who's new in our department, I told everyone they had to listen to the podcast. And she said, I never thought I'd be entertained listening to a financial podcast. And I said, yeah, because I'm funny.
When Cooper looks for this, I'll ask you guys, I didn't warn you at all. What is a good donut that represents this episode for you?
A good donut.
Yeah, what donut would, like, if you had to pick a donut?
No, there's a whole thing behind it.
So if you had to pick a donut to represent this episode for you two, what would it be?
Long John.
I was just going to say the same thing.
That's hilarious because that's the donuts I brought.
That's perfect.
Well, they've got the filling.
No,
I want the one with the
thinking
filling.
Custard filling.
The custard.
I brought the ones with the custard
filled
filling.
donuts are not my. I mean, I got myself an apple fritter, so
Because that's what this podcast will be, filled with lots of goodness.
okay, I'm here for it.
Well, let's bite right into it. Do you guys want to introduce yourselves?
My name is Alyssa Strukel, and I'm the mortgage servicing supervisor.
And my name is Baylee Avery, and I am also a mortgage servicing supervisor.
Sounds good. What does that mean? What do you guys do on a daily basis?
What does that mean?
So we oversee the mortgage servicing team, which is a team comprised of 11 people, and we take care of any mortgage that we've got on file here at Royal Credit Union. So anything that has already gone through origination, processing, underwriting, closing, and the borrowers have signed, then it comes to us. And they've got the beginning process is 30 to 60 days, depending on how long that is. And then we get it for the next 30 years. So escrows, payments, all that kind of stuff. That's what our team does.
Do you have a mortgage?
I do have a mortgage.
There you go. Who do you call when you have questions?
I don't know. That's it. Right? Like, who do I call?
So I guess it depends on what kind of questions you have to determine who you call. Because, you know, if you have questions about like refinancing or something like that, that's not something that our team would handle. That's something that we would get you in touch with a loan officer, or if it's for a home equity line of credit, into a mortgage loan specialist. But anything that's already on the books and existing as a loan, that would be our team.
What's the most common question you get?
Why is my payment going up?
That makes sense.
Yep.
Why does a payment go up?
A couple different reasons, actually.
Yes.
I think the most common reason that we see year round is you've got an adjustable rate mortgage and the rate has changed. So the rates change according to like the federal prime rate, and Royal adjusts their rates on a pretty regular basis. That's the year-round answer of why did my mortgage payment change? Right now, we're actually right in the heart of escrow analysis, which is on a fixed-rate mortgage product. Even if your loan itself isn't a fixed-rate product, if you have escrow and we pay your bills on your behalf, as those bills change, we have to change that every single year to accommodate for those fluctuations in those changes.
And how do we get notified for that?
How do we notify? So borrowers get a statement in the mail if they are not opted for electronic communication. And they also get emails and things to let them know that the statement is available. And then from there, it's a lot of information. It can be anywhere from like a 3-page to a 6-page document. So it's a lot of information. It goes over, what happened on your escrow over the last 12 months since the last analysis. It talks about if there are any changes to some of those bills, like property taxes. It shows, what were we planning on paying? What did we actually pay? Same with homeowners insurance and PMI. So it goes over a lot of those different changes. And then it also tries to set it up for the best case for the next year. So it looks at what did we pay? What were we planning on paying? Are we in a good spot for this next year and this next 12 months based off of the information we have now?
So as someone who has no idea what any of that meant, can you like, I don't know, break it down like a little bit, like what, like escrow, what you're paying my bills? Like, I wish someone paid my bills. What does that mean?
So you have a mortgage payment, which is comprised of your principal and interest of your loan. And then outside of that, you'll have another little payment that's comprised of just your escrow. So each month we'll collect a little bit of money and put that away in a savings account that's in the mortgage. And it accounts for your homeowner's insurance bills, your tax bill, and then if you have private mortgage insurance, which is the insurance you have to carry if you don't have 20% invested in that loan.
Gotcha.
We'll collect a little bit of money from you each month with that mortgage payment. And then whenever it comes time for your homeowner's insurance bill, your premium, or your tax time is here and you have a bill due, we'll take care of it for a member on their behalf.
What?
Mm-hmm.
Oh my gosh, here I am looking at like buying a house, which terrifies me, and being like, okay, so, I have to break that down in my budget, but you'll do it for me. How easy is that?
We will do it for you. And that's the whole point of an escrow, is to try and make it as easy on people to budget and, incorporate it into what's the minimum you're going to pay us every month. And the great thing about escrows is it is an interest-bearing savings account that's attached to your mortgage. So any money that's in there that's in the black, you're getting interest on. And when we do our analysis each year, if there's any extra money above $50, we give it back to you. So we're not going to hold on to it if we don't see that there's a need to hold on to it. And we evaluate that every year. So it's a really great service to offer for our borrowers, for sure.
I have a weird question about this. So if I'm out there, I'm trying to figure out what my payment's going to be, and I'm looking at all the calculators, how is the best way to figure out like what my final payment's going to be after I escrow everything?
So the way that we figure it out in order to get an escrow like established is highest level, you take all of your bills that you're going to have to pay out, add them up and divide them by 12. And then we also add an additional month into that. So we have a little bit of a cushion in the account to try and prevent it from going negative. So if you're looking at like a basic fixed rate loan calculator, and then you can get estimates, tax records are public. I don't think a lot of people know that. So you can look and see what the property taxes were on that home the past few years and kind of make a guess on, has it been going up a certain amount every year, that kind of thing. Add all those bills together and then tack that on to whatever the principal and interest payment would be for the loan.
I was just going to say, a lot of the online calculators will give you a ballpark. Like, it may not be the most accurate, but at least it gets you off the ground. So you're making a better estimate than not including it at all. And then you can do more homework and do the tax records and stuff like that. Or on the front end of it, Royal provides an estimate of it and has to factor it in at the time of closing. So we'll do that part of it for you too, if needed.
What do most members not know that you think they should know?
That their escrow payment's going to change.
Okay.
I think that's probably the biggest misconception that we get, especially for first-time homeowners that have never had an account anywhere before like this. You have a fixed rate mortgage, so the principal and interest portion of your mortgage payment is not going to change.
Right.
But that escrow does every single year. So I think that's probably the thing that, if I could share with the world, is even if you have a fixed rate mortgage, if we are paying for anything for you, your payment's going to change every year.
Okay, that was my question.
And another way to think about it is your homeowners changes every year. Your taxes change every year. So we have to change what we save for you to pay for those bills.
I still love that I don't have to worry about it. Like, you take care of that. You're like, we need a little extra money. I'm like, cool, take it.
Well, as a borrower, you do have to change your payment amount.
Well, yeah.
Right? So whatever payment method you're using, You have to go in and change it or ask us to change it for you at Royal. So
the automatic payments, if it's set up with a Royal team member, so it's something that you had come into an office or worked with one of our servicing specialists for to set it up, and we can see it in our core system in our core. At escrow analysis time, we are able to, if your payment increases, adjust that payment to help with the ease of still continuing to make that scheduled payment for you. If it's set up in online banking, we can't see that, so we don't have the ability to change that for you. And then if your payment goes down, that we would need to do a new authorization. But there are certain types of automatic payments set up in the system where it's automatically set up to pay exactly what's due on the due date, and that always will be the correct amount, regardless of whether an analysis has happened. So just depends on the kind of automatic payment that you've got set up.
Should we talk about PMI?
We can talk about PMI.
Oh, no. Everyone just sat up a little bit straighter. This is going to get real.
What does it mean? Primary mortgage insurance?
Close.
It's called private mortgage insurance.
I knew. I just took a course on mortgages. I did know that. It's in my notebook.
And that's a good thing to touch on, too, because some borrowers, they hear insurance and they hear private mortgage insurance and then they hear homeowners insurance. And what's the difference between all of that terminology?
James is already on top of this.
I am on top of this.
He's got all the information. I don't think we need to say anything. I think he can just...
Well, you guys could probably explain it better from a first-hand perspective.
So you have...
Unless you want me to speak to it.
No, that's okay.
It might be fun to listen to it.
See how wrong I am talking off the cuff. So I recently wrote an article about private mortgage insurance. So private mortgage insurance is the insurance that protects the lender from a default on the loan. If the borrower is not able to repay the loan, the protection is there to protect the bank or the credit union, the person that's giving you the money, not the borrower. That was very confusing for me when I was doing some research for this article. So
there's a really neat thing about private mortgage insurance too, though, that I'd like to share. So a long time ago, when you wanted to buy a house, the only way you were ever going to get approved for a loan is you needed to have 20% down. And if you didn't have the 20% down, you were not going to be able to finance that house because no lender was going to go near it because the risk for the lender is too high. You know, there's chance if there was damage to the property, if it were to go into worst case scenario like a foreclosure, it's going to be bad. But what private mortgage insurance does is it allows us as a lender to look at you as an individual and say, yeah, you're creditworthy. We trust that you're going to make payments on time. But in order for us to maintain that we are managing our risk, we're going to require that we have this private mortgage insurance, which protects us as a lender for someone who doesn't have that 20% down. I'm a really good example of this. I only had like $5,000 when I bought my first house, and that wasn't even close to 20% on any house. So it was something really cool for my husband and I. We were able to buy our first home with a very little down payment, and we even have borrowers that do it with no down payment. So it makes home buying more accessible to the masses. So it sounds like it's this scary thing, but really what it's doing is it's opening it up for way more people to be able to buy a house.
Is there any way to negotiate a lower PMI payment?
So negotiate a lower one, probably not, but PMI is the amount of the payment is determined on a couple different factors. So when you apply, and we put out an application as part of your loan application for PMI insurance, because it's all lender initiated. It's all done as part of the application process. It looks at any equity that might already be in the home. So what is your down payment? You know, maybe you don't have the full 20%, but you've got 10%. It looks at, your credit score. So if you've got a really good credit score, your PMI payment is going to be less. And then it also looks at the overall loan amount. So if you're getting like a $150,000 home, your PMI might only be $15 to $30 a month. If you're getting a $600,000 home, it's going to be more. Being totally open and honest, we see PMI payments anywhere from $12 to $300 a month. So it really just depends on all of those different factors. But the good thing is there's options for early removal if you're able to pay down or, make extra payments to the loan with good payment history. So
I'm sorry if my feet stink. I have to take off my boots. It's getting warm in here. It's a very heated conversation.
Please leave that in the podcast.
Oh, for sure.
But did you wear your good socks today?
Title of the podcast, Alyssa's Potentially Stinky Feet.
Is it rude to ask people if they're still paying PMI?
Is it rude to ask people if they're still paying it?
Yeah.
Why would it be?
James, are you still paying PMI?
No.
Interesting. PMI, private mortgage insurance, is part of like the whole loan process, stuff like that. Okay, so I need it. It's not really an option, right?
Unless you have more than 20% to put down.
Mm-hmm.
Thank you, James.
Which in today's home market is
Practically
maybe
impossible.
less
Oh my God. Yeah.
Yeah, it is. And a plug for people, everyone, I mean, there's a lot of people where there's a misconception that like home ownership is for people with perfect credit and have 20% down. That's not the case. Like there's a lot of options out there. The minimum credit score is not as high as you think. So I just encourage you to explore your options. Not that there's, housing inventory right now, but when there is, look at your options. My question was, so then what is homeowners insurance? Because that's something I get on my own. But like, can I just have PMI? No, because it's protecting the lender. So homeowners insurance protects me. I do know the answer to this. I'm just asking the question.
You're so excited.
Yeah.
Waving your hands around.
Stop breaking the microphone. Oh my gosh.
Hang on, it's going to fall.
All right, homeowners insurance.
Homeowners insurance.
Oh,
I'm going to let Alyssa take that one.
You have to have homeowners insurance. It does protect the contents of the home. So that's up to the borrower how much of the contents that they want to insure. But we at minimum require their homeowners insurance policy to have a dwelling limit that meets their note balance. So whatever you take out your mortgage for, $100,000, we at least have to have a dwelling limit on that policy for that amount.
for the note amount, which would be $100,000 in your example.
Correct.
What would the limit be? What does that mean?
So basically, when we're saying that you need to have a coverage limit of at least the amount that you have borrowed, what that means is if a tornado comes through and levels your house, that's what it's going to pay out. That's what your insurance company is going to cover. They're going to cover that dollar amount. You're going to get a check for at least that dollar amount if there's truly no house left. Most borrowers, and I would encourage this if any homeowner, would have more coverage than what their loan balance is, because you're going to want to cover the personal items in your home. You're going to want to make sure that you have enough to potentially rebuild, or if there is damage, enough to at least replace the things that have been damaged. Insurance agents are really great about working with people to determine what's the best coverage for your particular home and based off of your individual contents. Again, good example, my husband and I have a lot of computer equipment, so we actually call that out on our homeowner's insurance policy. If there were to be damage to our home, we would be able to replace that with the funds from our insurance company.
Jewelry.
Jewelry is common.
Rings.
Oh, yeah.
Furs.
Furs, if that's a
Like-
thing anymore.
Like a fur coat?
It's a jewelry and furs rider. I
Jewelry
think,
and
right?
furs.
Oh.
They go together. But yeah.
Thought we were going to some fur coats
I thought
here
we
or
were
something.
just going around the horn here, like, all right, whatever. Think of something else, Cooper.
And if you think of how much it costs to build a home now and the increase of material that's needed to build homes. So, the agents are the experts of helping work with the borrowers to how much coverage they need. But at the minimum, when we look at our policies, it can't be any lower than what you've taken out your mortgage for.
I was working with a member recently, and they actually didn't have their mortgage through Royal, but they ended up getting a home equity line of credit through us because they said at the point of looking for a HELOC, they didn't even know who held the mortgage or where it was or who to call. Royal services the majority of our loans. Why is that important? And can you tell me a little bit about that?
Yeah. We do use investors, which other financials use on a regular basis. The most common are Fannie and Freddie, and there's a couple government agencies that also do invest in loans. And without getting too deep into that, it just allows the individual financial organizations to lend to more people because you've got someone else that's helping back those funds that are being borrowed out. Many other financials do not retain the servicing of their loans. And what that means is even though they're originating the loan and they're beginning that loan, they sell all of the servicing rights to a larger servicing company. So in those cases where, well, I know I took the loan out with XYZ Bank, but I'm sending my payment to the other side of the country because that's where they told me I have to send my payments to. At Royal, when we originate our loans, the payments come here. If you're calling to talk to somebody about something on your loan, you're calling Royal Credit Union, you're calling our member service center here in Eau Claire with a couple of our servicing specialists working remotely. And we are the ones that manage the loan itself. So the payments will always come here. If you have questions, you call us. We do utilize vendors to assist us with that process. Our portfolio has grown over the last 5 years. But if there are any questions, you call us directly. You call Royal Credit Union. And like I said, we're growing, but we do our best to make sure that we're still giving our borrowers that individualized attention when they do call us, and we're able to assist them the best that we can.
I think that's nice. You know, when you call in and you have confidence that you're talking to somebody who's also working and living in the same community as you are. So it allows us to give more compassion and understanding and just that trust factor that we're there to help them through the process, whatever it is.
I was going to go into a whole looking for houses right now. Do you guys have any tips? Do you have any leads for me? Don't tell James.
Don't buy a house next to that river there. Flood insurance, you don't want it. It's very expensive.
I mean, it might be worth it if you really want that lakefront or riverfront property view. It might be worth it to you, but flood insurance is very expensive.
Is it commonly required, or how does that get determined?
So it gets determined from FEMA flood maps. If your house is built in a spot where FEMA has in the past recorded large amounts of flood activity, flood insurance is required on that. And there's like federal regulations for us to require flood insurance on those properties. So yeah, those policy premiums are pretty big.
Like shop for insurance.
Shop for insurance, for sure.
I always think like, some things, it's really great to be really loyal to whatever that is.
Like your credit union?
Yes, like your credit union. And it can, being loyal and being a long-term customer with the insurance can pay off. But it's okay to look around to make sure you're getting the best rate.
And especially if you're working with an agent should be able to help you find a new company. If your premiums are too high, they don't always just shop for one company.
Yeah, you beat me to it. I was just going to say that.
You're talking about a broker, right? Is that what it is?
I think you should just look around in your community for insurance agents and see what comes up. Or ask your neighbor. Who do they go through?
Do people talk to their neighbors?
Yes, people do still talk to their neighbors.
Your neighbor's actually kind of important once you own a home, Cooper. It's a little different than
no,
apartment
I know
living.
that. But, with the whole, driving garages, there's a whole thing about it in like a history book and how it made us less social and, how
driving
people's homes are
garages
private.
made us...
because you don't have to like you're not parking outside and seeing other people.
Maybe
like
I'm an outlier then. I don't have an attached garage. So like I know my neighbors because when we get home at the end of the day, we're like all outside around the same time.
Where other people are driving into their garage, shutting the door and walking into their house. Like,
who are these hermits that don't see the light of day? What vampires are you hanging out with?
There are windows. I don't know them.
In Steve's case, he has to talk to him because they're like, are your kids still okay? Yes, they're just running around having fun. They're not actually like, hurting themselves.
They like to hit each other.
Well, and I have a reactive aggressive dog right now that I'm fostering. So talking to she wants to eat everyone. So we're working on that. So when we're So when we're out for a walk and she's like growling and lunging and I'm like, yeah, no, they're like, yeah, we don't like that lady.
Are you going to buy a house?
If there were houses available, yeah, because...
This is like breaking news. I didn't know you were thinking about it.
Well, here's the deal. Renting sucks. It doesn't suck. I love who I rent through. But I'm at the stage in my life where I want a decent apartment. I want a garage. I don't want some, not nice place, right? Where I live, it's hard to find places like that. And so to stay with the company I'm with, it's going to be $1,200 a month for a smaller apartment. And I could afford that, but it's going to be straining. Is there anything okay, so I'm considering buying a house. It terrifies me. Is there anything on your side, that mortgage servicing side, that I should know, or a first time home owner should know, or someone who I think we covered a lot.
We talked about a lot, and two, the loan officers here at Royal are really great at asking those like upfront questions. If you've got a question about, like how do I even get started? I know we have an online application, but if you're one of those people that likes to do something more in person, we've got loan officers at just about every single office, if not every single office, and they are the experts. So if you're thinking about it or you're wanting to just kind of explore what your options might be, they are definitely the people to go to for sure.
For future guests, should I fill your mugs with coffee or leave them empty? Yeah. Did I drop the ball?
Well, we should ask because he doesn't like coffee.
Well,
we should ask what their preferred mug beverage is.
I think if people don't like coffee... No, I'm not going to say that.
I think you could say, well, you know what? Thank you so much for being on Money Donuts. We're going to get you a coffee mug. Do you want something in it?
My last question is, what is the best financial advice or general mortgage advice that you'd want to give to somebody? Financial advice, best mortgage advice.
Do you have a good mortgage joke?
Those are two different questions.
Don't have a good mortgage joke. The best advice that I would give to anybody when it comes to mortgage or financial is just be open to learning more. I think there's so many different aspects to what our team does that I wasn't even aware of existed before I started working here. So just being open to learning more about things and being receptive to that, because I think it's pretty common for people to come in with a preconceived notion of what it means to have a mortgage on your property, and just keep an open mind and be receptive to maybe learning something you didn't know about before.
Mm-hmm. And that most things are fixable. And that's why we're here. That's why you guys can call us, because we're trained to answer phones and to answer questions. And so if there's something that you don't know, we're more than willing to walk through it with them. Or if there's something wrong, we're trained to figure out what happened and fix it.
I think that, to me, that speaks again to the servicing aspect of it too. Like, if Royal knows that we're going to hold the servicing of your mortgage, we're going to continue to service your mortgage, we're going to work as hard as we possibly can to make sure that you are in the know as a borrower, and that you are informed and educated and know how to proceed moving forward, right? Like, no matter how long that initial call takes or that initial meeting takes, you could spend, I don't know, like, what's your guys' average? Is it really bad? Okay,
no,
we don't have to go
no,
there.
It's average call time, I think, for our department, accounting for those outliers that take longer or much shorter, I think is like 5 minutes. But that's certainly probably a little skewed. I know that we certainly do spend more time on the phone with borrowers, especially this time of year with escrow analysis. I think average call time this time of year is probably 20 minutes, if not a little bit longer, just to really be able to dig into what is the true question and how do we explain what's happening in a way that makes sense for the person that's calling.
And sometimes I like to even ask the borrower, like, do you want me to look into this while I'm on the phone with you and we talk this out together? Or should I just let you go? I'll look into it and call you back when I have the answer or something else to talk about. So it just depends.
I just thought of another piece of advice. Read your statements.
Ooh, that's for everything.
That's
I
for
think.
everything.
Yeah.
That's financial advice all around. Read your statements. If you get something from your
mail, yeah.
If you get something from your financial, open it and read it.
Thanks for listening, and
Like us, subscribe to us, leave us reviews on their favorite podcast listening platform, or on rcu.org/podcast. You can listen to everything there too. And watch all of our really awesome full-length video recordings of our episodes on YouTube. I added some fun stuff in there today.
and maybe our team members will start listening more.
Okay, everyone gets to eat a donut now.
Yay!
They're not filled, but they're long, John.